Sure, we want to get your, some of your thoughts on this latest news that we have, the $1.9 trillion package that President-elect Biden is proposing. But first, let's just talk overall about where we are and where you think you see us going, because you make the point that the markets were great last year with not a great economy. We could have the inverse this year. We could have a much stronger economy if things play out with the vaccine, if that works a little bit better and we get that going. We could have a better economy, but maybe soggy markets, because some of the things that help the markets won't be the same this year. Can you go into that?
Yeah, exactly. So if you look at what happened last year as to what drove markets in the midst of the pandemic, we've never had an instance where markets have done so well during a recession as we had last year. There are really three factors. One was the incredible amount of stimulus that was put to work. The second was a huge increase in savings, especially of the rich who were sitting home. And I think many of them were also trading on all sorts of platforms. So a dramatic increase in savings, which led to much more speculative activity in the stock market and investments as well. And the third reason was that the market really took the view that this is like a hurricane, a one-off. So they were quite willing to look through it and think that things will be much better in the coming year. So now, if you look at this year, 2021, all those three factors are broadly going to go into reverse. But I think that the economy comes surging back. In fact, we're seeing the economy hold up relatively okay, even in the midst of a pretty bad second wave. And then we're going to have a lot more spending put to work this year. So I think savings rates drop dramatically. And I think a lot of the recovery is already discounted in the stock market. So you have the exact inverse of last year, where the economy surges back, surprises on the upside, I think, and you end up getting, I think, a pretty meaningful increase in long-term interest rates, and the stock market has some trouble with that.
So do we have a marginal up year, or could it actually be a consolidation year where we end either the same or lower? What in your gut, what's it telling you?
I think my gut's telling me that it could be a consolidation year, that we're following the typical pattern, where in the first quarter of a year, you get a blow off and a major top in the markets. And the second and third quarter, you get a pretty significant drawdown. I think that that's the rough pattern. And we could end up the year, as you said, in a consolidation phase, even though the economy surprises on the upside.
Do you see us hitting the Fed's target of 2% inflation?
I think so. The shortest way to discredit yourself is to talk about higher inflation, because for 30 to 40 years, that's been such a bad forecast, since inflation never seems to go up. But I think many conditions now are coming into place which could lead to an inflation surprise. Those include factors from deglobalization to the fact that there's an incredible amount of stimulus out there when the banking system isn't really broken. So you're putting a lot of money to work when the banking system is in reasonably good shape. So I think that you could end up getting a big inflation surprise. And the other very important factor is the big move in commodity prices. I think that commodity prices are coming off a decade bear market, and commodity prices could surprise on the upside. So I think that the Fed's inflation target of 2% could easily be breached in the second half of this year.
Shepard Smith here. Thanks for watching CNBC on YouTube.